Welcome to NM Serena. In this video, we are going to discuss the basic concepts related to the stock exchange. Now let us understand what is a stock exchange. According to the Securities Contract Regulation Act of 1956, a stock exchange is an association, organization, or body of individuals, whether incorporated or not, established for the purpose of assisting, regulating, and controlling the business in buying, selling, and dealing in securities. Or in other words, we can say that a stock exchange is something like a vast warehouse where the securities are taken away from the shelves and sold across the countries at a fixed price. It is an organized and a regulated market for trading in various securities issued by companies and other institutions. Or we can say it provides a place where the business of stocks and shares is conducted. It affords necessary facilities for the transfer of stocks at competitive prices and without any delay. It's a convenient machinery whereby the investor not only gets an easy market for his shares but also the service of experts. From the meaning itself, the features of stock exchange is clear. Let us list it out. The first feature is that it is a place where the securities are purchased and sold. And it is an association of persons, whether incorporated or not. And the trading in securities is strictly regulated, and the rules and regulations prescribed for various transactions are also given. Then the both genuine investors as well as the speculators, they can buy and sell shares in the stock exchange. And securities of corporations, trust, governments, municipal corporations, etc. are allowed to be dealt at the stock exchanges. And coming to the functions of these stock exchanges, it ensures the liquidity of capital. Actually, the stock exchange provides a place where the shares and stock are converted into cash. The exchanges provide a ready market where the buyers and sellers are always available. And those who are in need of cash, they can sell their holdings. If this was not possible, then many persons would have been fearing blocking of their savings in securities as they cannot convert them into cash easily. So, the stock exchange helps in making their capital liquid. And then the stock exchange provide a ready market for the securities. Securities that are once listed continue to be traded at the exchanges irrespective of the fact that the owners go on changing. The exchanges provide a regular market for trading in securities. The investors can also evaluate the worth of their holdings from the prices quoted at different exchanges for these securities. The securities are quoted under the free atmosphere of demand and supply, and the price is set on the basis of a free market. And thus, we can say that the stock exchanges are helpful in evaluating any type of security listed there. And the stock exchanges, they also provide a ready market for the securities by mobilizing the surplus savings of the investors. The investors do not have any difficulty in investing their savings by purchasing shares, bonds, etc. from these exchanges. If this facility was not there, then many persons who want to invest their savings will not find any avenues to do so. Thus, it plays an important role in mobilizing the surplus funds from the investors. And the new and the existing concerns who need capital for their activities, they can approach the stock exchanges. The new concerns, they raise their capital for the first time, and the existing ones, they increase their capital for expansion and diversification purposes. The shares of new concerns are registered at the stock exchanges, and the existing companies also, they can sell their shares through the brokers, etc. at these exchanges. So So we can say that the exchanges are helpful in raising capital both by the new concerns as well as the old concerns. And the intending buyers, they can remain in touch with the exchanges for investing their money in securities. The dealings at the stock exchanges are governed by well-defined rules and regulations of the Securities Contract Regulation Act in 1956. So there is no scope for any manipulation of the transactions. Every contract is done according to the procedures laid down, and there is no fear in the mind of the parties dealing with it. So the safety in dealings brings confidence in the mind of all the concerned parties and helps in increasing the dealings in shares. And then comes the listing of securities. We know that only listed securities can be purchased at the stock exchanges. Every company that want to list its securities will have to apply to the exchange authorities. The listing is allowed only after a critical examination of the capital structure, management, and the prospects of the company. And the listing of securities, it actually gives a privilege to the company. And then comes the platform for a public debt. The increasing government's role in the economic development, it has actually necessitated the raising of huge amounts for the purpose. And the stock exchanges, they provide a platform for raising this public debt. The stock exchange are also organized a market for the government securities. However, there is no provision for a separate counter for the government securities, but these are traded through brokers dealing in these securities. And then the companies listing securities with exchanges have to provide their financial statements, annual reports, and other reports to ensure maximum openness of their corporations, operations, and working. The economic and other information provided at the stock exchanges help the companies to decide their policies. And the stock exchange smoothens the price movements of the stocks in the market by ensuring a continuous flow of securities. And more importantly, the stock exchange renders safeguarding activities for the investors in securities. It provides a grievance redressal mechanism also for the investors. So we can say that the stock exchange operates a compensation fund for the protection of investors, for protecting the interest of the investors. The stock exchange proves to be immensely useful to the investors as it offers a number of benefits to them, like liquidity of investment. Stock exchange ensures diversification of the investment and the risk by providing this liquidity. The investors can buy and sell securities or shares as and when they wish. So we can say that stock exchange ensures liquidity of investment. Similarly, it imparts a negotiability to the securities. The investors can raise loans by pledging their holdings as collateral security. Thus, we can say that the securities becomes negotiable and it helps the investors to raise loans from various financial institutions by pledging these securities. And then the stock exchange assures safety and fair dealing because there are strict rules and regulations to control the security market. And then it gives them at all times the knowledge of the true value of their investment through the stock exchange quotations. And it minimizes the risk of investment in the industry by facilitating quick disposal of securities at all times. And it also educates the prospective investors with the advertising influence of the publicity of its transactions, and also enables them to make a rational choice among the competing securities. Thus, the investors get full information relating to the securities from the stock market. It discloses all the information to the public. Hence, the investors can make their own choice as to which securities they have to prefer and which securities they have to avoid. Now let us discuss the benefits of the stock exchange to the company because it proves very much beneficial to the company due to a few reasons like It enhances the credit standing of the company. The listing of securities gives an impression that a company is a sound one. This is because stock exchange give the listing permission to only those companies whose operations are according to the rules and regulations stated by the Securities Contract Regulation Act. And so, if a company is listed in a stock exchange, that means that company is financially sound. Hence, it increases the public image about that company. And in addition to that, it widens the market for the listed securities. And it also enhances the marketability to the company's securities because the public has got confidence in this company and public will prefer the securities of this company that is listed in the stock exchange. The stock exchange also minimizes the price fluctuations of securities that are listed, and it also enhances the confidence of one and all dealing with it. And the risk of the new issue remaining unsolved by the public is also reduced because it enhances the response of the public to the issue. And in addition to that, the stock exchange also enables the company to command a better bargaining power during its amalgamation or merger because it enhances the market value of its quoted securities in relation to its earnings. And finally, it enables the company to enjoy several tax advantages by listing its shares or the securities in a stock exchange. And now let us discuss the benefits of the stock exchanges to the community as a whole. First of all, it stimulates the investment in industry and also mobilizes the public savings, and in addition to that ensures a steady flow of capital into the productive enterprises, and it helps the government in raising necessary finance from the public for the purpose. It also assists in the best utilization of capital and also in minimizing the wastage of scarce capital resources. Actually, it is diverting the funds from the unproductive to the productive enterprises by putting a seal of approval on the profitable securities. And then it smoothens the process of capital formation by inculcating the habit of saving among the public, and also the habit of investing and risk taking among the investors. By providing the facilities for shifting of investments, it puts the idle funds into productive use. There is an important benefit of stock exchange. And another one is that it reflects the business conditions in the country and signals the economic crisis. Through the stock exchange, we can know where this company is, no, sorry, the where the country is proceeding to. So it helps us in understanding the existing position of a country. So we can say that the community as a whole gains in the form of increased savings and faster capital formation, diversion of funds from unproductive to productive channels, as well as the growth of most productive and useful industries in the economy as a whole. These are the benefits of the stock exchanges to the various parties. Hope you have got a basic idea regarding the stock exchange. Thank you for watching this video. For more videos, subscribe the channel.